Well, we're going to get rolling here this week again. And, the one thing is we know we're in the middle of the weather market and we've really hit weather the last couple of weeks and showed you the weather maps we look at. But there's more to these markets and weather. And, I got to tell you here in this week's webinar, we're just going to take a little bit of weather break and then take a look at some charts in here on the ag markets, but also look at where world ag markets are at and some outside markets too. So, we're just going to skip around here a little bit, but I think these are some things to point out. Well, first thing we want to bring up here is a Discord chart. I mean, just like the bulls and bears can really argue, weather, they can really sit here and make some valid points on this Discord chart. I mean, you're going to have the bears in the market say, look, we've got the potential for a double top in place. And if we take out moving averages or those recent lows, there's a long ways that we can break. And they're looking for favorable weather down the road in here to get the momentum to shift down in here and say, hey, we're right. We had that bearish setup in the market. On the other hand, though, the bulls in the market are going to really make a strong argument. Hey, this is just a pullback that we're seeing and look for support to hold. If the 50-day moving average is taking out at 555, we're probably not going to go below the 5 to 5.25, and we have some weather issues or demand, then we're going to get that next leg higher in this market. Both sides have strong arguments in here right now. We think weather is going to keep this thing two-sided over the next 2 to 4 weeks and then break out. But when both sides have such strong arguments like they do right now, the one thing we do need to acknowledge is once we do get that breakout, it's probably really going to run. When we get over to the bean market, you can make an argument a double top similar to corn and that there's support holding it underneath. We're really not going to get involved in this bean chart as much as we just did on corn because they do have a pretty similar setup. I think the thing we got to look at, though, on beans is the volatility that can be presented. When we do break out, corn might move 50 cents to 75 cents a bushel, but beans could move $2 to $3. We expect some violent swings to go on in the bean market. And yes, beans did make new highs in here right now where corn did not. But the reason why that occurred is when we look over on a spring wheat chart. And I'm showing on the top one is a September 21 Minneapolis spring wheat chart. And you can see that went and made new highs recently. When you look at the red lines on both the top chart and daily September Minneapolis wheat and the lower chart, which is a weekly Minneapolis wheat, it's both the 8 to 850 range where we have those red lines. As you look on the bottom chart, we peaked out in 2014 in that range. 2017, we had a spike high above 850. And now this year, we had 2 trades into that 8 to 850 range and then backed off. It looks to us that a high is in place on the September Minneapolis wheat. Not so much from a chart standpoint in here, but from fundamentally, as we did see some rains through the northern plains in here to probably at least help stabilize the crop. Drought markets need to be fed every single day. The bunk is looking a little bit empty that way right now. Not saying we're bearish on Minneapolis wheat and that this thing's going to completely fall apart, okay, as the crop is going to be declining. And as you look to the end of the month, we think acreage on spring wheat will go down as well. But the whole bullish enthusiasm, or like the rally we saw in the early part of June, is probably behind us. We think that there's some good support here in the Minneapolis wheat in the 720 to 740 area. A sustained move back above $8 will be difficult. I like to look at the world markets as well too. And here is September EU wheat futures. And as you can see, it's a little bit weaker than we had in Minneapolis wheat. It's going to be really important for September EU wheat futures to hold the end of May lows. If that is taken out, you're going to look for about another 10%, 5 to 10% drop in the price there. That's the concern we have. And besides the northern plains of the U.S. and even the Canadian prairie, world weather is pretty decent on the wheat side of it. This is what's to watch in here if we do break down to the lower side. Watch the EU wheat market. The next slide in here is September palm oil futures. And we need to remember that palm oil was the bullish stalwart in the market. It just kept on grinding higher, pullbacks, and then eventually went up and we matched the all-time highs. The thing we really want to point out, though, on palm oil is how fast things can turn back down. over the previous 7 days, we had palm oil futures break around 20%. To put that in perspective, that would be like a $1.20 break in corn or about a $2.50 break in soybeans. That break in palm oil is significant. We had a recovery yesterday in here, but our concern when we look over at the palm oil side of it is that the long-term uptrend has been broken. When I get to the next one, we're going to look at September Chinese corn futures. And the thing that sticks out to me on this chart is that we have prices about mid-range in what we've seen over the last 6 months. If we apply that mid-range price to December corn futures, we've had DC corn in about a 430 to a 630 trading range since the first of the year. And so the midpoint would be 530. DC corn right now at 570 compared to where Chinese prices are just a bit overvalued. Now we bring all of these world markets up in here right now because even though you look at corn futures and you look at new crop bean futures, we're staying in some uptrends in here and holding above the 40, 50-day moving averages. And you can make the argument that we still have weather in front of us. But when you look at the world markets, they're giving us signs that they're starting to trend back down a little bit. That is a concern for us. The other thing we want to take a quick glance at is a couple of outside markets. We've hit up on lumber here a number of times this year as that has been such a hot market and we really highlighted on its upswing. But since we just want to be fair and look at both sides of the market, we do need to acknowledge that lumber has broke lower. I mean, just in the last 2 months, lumber has dropped off 40% in value. I mean, I have to admit, the other day I stopped at Home Depot, and when you see a 4x8 sheet of plywood at $50, that's becoming a little rich. Now I'm just wondering, with lumber futures breaking, how fast it did. How long is it going to be before Home Depot and Menards actually lowers that price? So from an outsider inflation standpoint, lumber is giving us a sign that some highs may be in place as consumers are rejecting the stronger prices. If you really want to be bullish in here on outside markets or inflation, we think you got to look over at the crude oil chart. And on here, we have the red horizontal lines between $80 and $110. And that's when crude oil was trading at in 2011 through the early part of 2014. Now, if we go back to that time frame on corn, we had corn in that 3-year time frame trading $5 to $8. Now, the previous 5 years is a blue line where we essentially had crude oil trading $40 to $70 a barrel, okay? And in that time frame, we had corn trading basically a $3 to a $4.50 trading range. If the ag markets are going to get hot off of inflation concerns, crude oil is what needs to be watched. If we get a sustained move above $80 or even see $100 crude oil, that's going to be a strong argument that we should be supporting $5.50, $5, and maybe even can trade up to $6.50, $7 on corn. On the other hand, if crude oil is not leading us on inflation in here right now, it's probably going to be a sign that corn doesn't need to really trade much above $6.50 a bushel. And you can make an argument then that even though corn prices might be up from the previous 5 years, we could still pull back to the $4 area. If crude trades between $50 and $70, we think a solid argument on a corn range is $4 to $6. It's going to need to take crude oil above $100 in here for us, besides some major weather issues, to get real excited about corn futures trading on the north side of $6.50. Now, to wrap this thing up, I got to tell you, if I'm just looking at the world ag markets in here, if I'm looking at palm oil prices, if I'm looking at Argentina bean prices, if I'm looking at EU wheat prices, if I'm looking at what they're offering wheat out of the Ukraine and the Ukraine corn crop, I'm going to be defensive of the U.S. markets in here, okay? It just seems, besides the corn crop in Brazil, that the rest of the world is in pretty good shape. If I'm looking at the crude oil market, okay, I think you got to almost be bullish in here. Crude is trying to break out above the higher side with this week's move above $70 and saying that this crude oil market is going to give us some support. Now, sitting here based off of weather, I just don't think you want to get too bearish or too bullish over the next little bit of a time frame. Let's say 4 to 6, 4 to 8 weeks in here. And when I look at the weather markets right now, you got to break it down to wheat, corn, and beans. On the wheat side of it, I think we're nearing an end on the weather. I know the spring wheat crop could be affected, but we're harvesting winter wheat or soon to be harvesting a winter wheat. So this wheat market weather rally is about over with. On the corn side of it, we probably got a 2 to 4 week window where we're going to have a lot of volatility. Then after the 4th, look for the breakout. Expect beans to hold on a little bit longer. We're going to wrap things up in here today. Thanks for tuning in. You're going to encourage, if you have any questions, please drop us an email or any suggestions. Also, we look forward to being back here again next Tuesday. Thank you and have a great day.